What happens when you take a $200,000 loan from your parents and you start a real estate business during the Great Recession? How do you face immense pressure to succeed? How do you scale a real estate empire while staying true to your values? This is Driven to Win, the show that helps you, the entrepreneur who wants to win in all areas and isn't afraid to do the work to get there. I'm your host, Chaz Wolfe. My mission on this show is to help driven entrepreneurs grow and win in all areas. And today I welcome Joel and Chaz Worcester. You want to talk about winning? These guys have built a multi-million-dollar real estate empire through sheer determination, strategic thinking, and a deep sense of responsibility. They're the co-founders of Worcester Investments and are well-known real estate moguls in the Kansas City area. In this episode, Joel and Chaz share how they deal with immense pressure of handling family, friends, and investors' money, and how to make smart moves investing in real estate today. So, how can you start with absolutely nothing and still win in real estate in 2024? Keep on watching. Joel, why don't you get us started with how you guys came to KC, a little bit about your backdrop as far as real estate, where you guys come from?
Yeah, so we're from Oregon originally. We decided right when I graduated college, and then Chaz dropped out. My older brother had just graduated as well. We played sports together. We were very close, and we wanted to go into business together one way or another. From an early age, we realized we had the entrepreneurial gene. We all played small college basketball, and we won a state championship together at the highest level in Oregon. And we realized we weren't going to be playing in the NBA, probably too late for me at least. And then as soon as we woke up to the real world, business just kind of made sense. You know, there's a lot of similarities to sports, I think.
Yeah.
And you can put in as much time. You can always get better. You can always grow. You can always help your team more. So there was just a lot that related to us with business. And we read a lot of business books, entrepreneurship stuff. Rich Dad, Poor Dad was kind of instrumental. Good to Great. We started off kind of trying to formulate a philosophy of how we wanted to do business. And then we started a business from there in our very early 20s. And then we started doing real estate in Oregon, and it was just really hard to make numbers work. So it was 2007, and market was at an all-time high. Unfortunately, we didn't have any money, and we weren't in a place to really buy much, but we learned a ton. We bought a handful of creative financed, seller financed deals that were huge fixer-uppers. The market crashed, and we still couldn't make numbers work. We decided from Rich Dad, Poor Dad philosophy and reading a lot, we wanted to be a cash flow generating, passive income generating business. It was very hard to do that in Oregon on the West Coast, because so many people are competing with people who don't need deposited cash flow. They're speculating that rents are going to go up, values are going to go up, but I can negative cash flow for a couple of years. We weren't okay negative cash flowing and just like hoping the market goes up. Long story short, we ended up knowing someone in the Kansas City market. We compared the two markets and ended up looking at properties. Chaz and our other brother moved, and then I moved within a couple of years. By 2008, 2009, we were doing everything in Kansas City. We bought our first apartment complex in early 2009. We had, I think, 75 units of just small, most of them in Kansas City, Missouri area. And most of them were single family duplexes, small multifamily. And then we bought our first apartment complex in June of 2009. We raised money for that from outside sources, accredited investors. We did the same thing later that year in December, I think, of 2009. And that was a little bit larger property. Both of those, we got incredible deals on them. We'd really learned a lot by them. And we didn't have property. We didn't buy property at the peak of the market. And so we weren't licking wounds like everyone else was. So we just got incredible deals, and they did very well from the beginning.
Yeah.
And then that's kind of, that was kind of the foundation of our bread and butter. And we've done that over and over on a larger and larger scale over the last 15 years.
Chaz, Joel mentioned a few minutes ago that you guys kind of had the entrepreneurial spirit, or it was in your DNA, but you had mentioned earlier that your dad was a pastor. Where does the entrepreneurial bug come from?
I think we have different answers. Our oldest brother, Paul, and Joel, both probably to a greater degree than myself. We didn't have a lot. I mean, we were lower middle class, so we're like going hungry or anything like that. But they share their stories, and Joel can share his about noticing that we didn't have as nice vehicles and as nice things. And then our dad, I think more so with them, shared about our financial struggles with our oldest brother, Paul. I know to our oldest brother, at least, just that we had a lot of worry and concern around our finances. So I've heard that from them. For me, it's more just the competitive side related to sports. Um, I love competition, and business to me is the greatest sport that exists because you can create your own scoreboard. There's always a new challenge, and there's teamwork, and there's so many. I mean, it's like it's sports on steroids. And so yeah, it's just the competitive juice. That's the element to me that I've always loved business. And yeah, we tinkered with stuff from a young age, and I credit our dad. He put us to work. The idea of hard work and the satisfaction you get after putting in a long day and maybe getting, we worked kind of under the table jobs, summer jobs. We worked for our dad. And so we definitely from a very young age had that ingrained in us.
Mm-hmm.
And so I would definitely say it's just the competition that
The drive to win, the want for more. It is funny how you guys have described Paul, the oldest, as maybe a little bit more in tune with that carrying of the weight. But I think that's more of a firstborn thing. As a fellow firstborn, we were part of the adults first. We were in that conversation of really just life. I can see it with my firstborn. She's very much in tune with like carrying the weight with us, as opposed to my other youngers who are like, when's the next time we get to play?
Yeah.
Would you add anything to that, Joel, being closer to age and Paul?
Yeah, I think Paul and I kind of carried that weight together. I definitely felt it. I remember a motivation very early on. I was probably early middle school, and I was going to definitely play in the NBA. And it was, and my motivation, one of my big motivations was to take care of my mom because we were always short on money. And so I was part of those conversations where my dad, he's an amazing person, incredible role model in so many ways, but he was a worrier. So he would always, and we were fine. I mean, we were definitely low on money, but he would talk to us regularly about how we might go bankrupt. We might end up in this. And they never had money. They didn't make any. My mom was a teacher at a Christian school, didn't make very much. My dad was a pastor of a small church. My mom did the extra work and was the soldier, would do anything for us. I know from a young age, I was very motivated to take care of her. Not that I ever needed to or anything, but they ended up being they don't ever do this. I don't advise anyone to do this. My parents had no savings, no anything, but they had their house that had gone up in value in a good location, Oregon, near the University of Oregon campus. And it had gone up in value quite a bit over time. And they took out a second mortgage, a little over $200,000, and that was our seed money as a company. They invested $200,000 into our company very early on, and they were like maxed out. Yeah. But it went really well. They got a quarter of the company, and it ended up being an incredible investment for them. Many multiples later, that was probably one of the best feelings about having a successful business. My mom benefited from that a ton, which is cool.
Yeah. What do you think? I can relate to that, especially growing up in a single mom home and wanting success to be able to kind of like pay it back and take care of her and even my grandmother. But for that moment of when they made that deposit of $200,000, it was the opposite of what you had said you were motivated by. Like you wanted to take care of her, but here she is taking care of you kind of and believing in you. What was that moment? Describe like when you saw the money come in and it was like nervousness or like fired up. Like what was that?
Yeah, we were overconfident. I hope we weren't pompous ever, but we thought we could do anything. That's kind of the entrepreneurial part of that. I thought it was going to be a great investment for them. I was very confident that we were going to make them a lot of money. As a result of that, I felt a huge burden. I already had the burden anyway, so it's not like it was more like an opportunity and we're going to prove that this will be, it's like when it's that kind of stakes with your parents' money and they don't have anything else, it's very motivating. It's not an option to fail. That's how I looked at it. It was never an option to fail. Anytime we went through, we probably negative cash flow for 7 years. We were doing better and better, but we were a very high growth company and we were adding cash flow. We were also trying to add a team and stuff like that and expenses. So we had a couple times where it didn't look good. I think it was first 3, 5, 7 years of any business. There's going to be some scary moments, but I think for us, and that's something we all had in common, Jesse, Paul, and myself, is failure was just not an option. We barely paid ourselves anything, and we were just going to do whatever it took to succeed. And there were some times where it was very hard to sleep at night. And then my father-in-law invested. He was kind of an early investor too, a good family friend. So these people, it's like, we're not going to lose their money. I couldn't live with myself if that happened.
Yeah. Well, you obviously are speaking from integrity. There are unfortunately people who would take anybody's money, let alone their parents, and not feel that way. So you say it so nonchalant because it's the character of who you are. But obviously that's why they invested in you, because they believed that what you just said was true, right?
I appreciate that. It is interesting to see. And I get it. People make venture investments, and it's not like everyone who's lost other people's money is not a bad person, obviously.
Sure.
And it's not, they don't have integrity and all that. But yeah, I do sometimes get surprised at how easy it is for people to lose other people's money and feel okay about it, because that wouldn't have been the case for us. I know that.
Yeah, I remember when I opened up my first franchise. I was 24 years old, and my best buddy at the time, he asked me, like, what if people stop buying that product? And I was like, okay, I guess I would go back to sales and I would pay off the loan. I was about to get about a $400,000 loan as a 24-year-old, and I would pay it off, and then I would probably do it again. Kind of in that weird, like, evil, a little bit messed up here, and he was just like, okay, just checking to make sure. But what you said, Joel, and Jesse, I want to hear your opinion on that, but there is something when you decide, like, that's what I heard you say, Joel, is that I decided there was zero chance I wasn't going to win. It was my mom on the line, like, or whatever that was. In my case, it wasn't necessarily my mom's money, but it was like zero chance I'm going to fail. If this thing doesn't work, fine, I'll pivot and move on, and I will still win.
Exactly.
What are your thoughts on, especially being the competitor?
I mean,
exactly.
I see both our parents' investment, and then we had, as I think a lot of young entrepreneurs do, kind of friends and family was our early investors. And I see it as a blessing that we have, 15 plus years. Basically, every investment we're doing, we are indebted to someone else. And both our parents were very servant oriented. It was kind of adding value to others, serving others.
Yeah.
And to me, I did definitely see it as a huge blessing that we were kind of forced into it from day one. That, we're doing this business. Yes, there's a competitive element, but at the end of the day, we're reporting to friends, family, and investors that we feel incredibly indebted to. I think that's a great framework, because I think in business, the competitive and the ego can, like, go too far. I like how you talk about, with Gathering the Kings, about, family oriented and down to earth. I think there's an element when you're reporting to and serving someone else humbles you, and you realize, okay, this isn't about me. It's not about my own ego. I'm really trying to do good for someone else. It was very difficult. It's a lot harder to start out with, a lot of people that get into real estate get in later in life. They have their own money, so they're investing their own capital and then maybe pooling it with some other people. The way we got started, the stakes were a lot higher. As Joel said, 7+ years where we were kind of right on the edge in terms of making it. But I think in hindsight, it was a huge blessing.
Yeah, I think that you're right. It can go well. I'm glad that you see it now as a blessing too, because you've got hindsight. There's a uniqueness underneath that umbrella of pressure, and so I want to go down that rabbit hole, because we kind of created this little spot here. You took family money, you've taken friends, and now other investors that maybe you had relationships with, but this is like a really big deal, and I know you guys take it seriously, but that creates potentially like this immense pressure. And I want to talk about how you guys operate inside of that pressure. I can remember wanting to grow our franchise portfolio. We were 2 or 3 in, and I really wanted to move faster. I wanted to go to like another 3 locations. I wanted to double faster than I could do it on my own. And so I was talking to my wife about maybe asking her mom if she wanted to invest. And she was appalled, like, oh my gosh, no, like, if we lost my mom's money, I wouldn't be able to sleep. And my perspective was, well, that's not even an option. I'm going to like make your mom money. This is a blessing. She should want my phone call, So I didn't receive it as pressure, but she did. Talk about how maybe you guys received that pressure still even today, as you guys, you guys have huge investments. How do you guys deal with it?
Yeah. I think Jesse said it well, but even, I think it started out with friends, family, very close friends, family, like my father-in-law, like I couldn't have probably felt a bigger burden, like from like wanting to not screw it up. I mean, you relayed that with your wife, but I had a similar perspective with you, like that you had and I was like, hey, we're gonna make him money. Like this is going to be good for them, and we'll do anything. And I genuinely always believed that investing with us is your best option. Like we're just gonna do, and that's obviously there's a lot of naivete as a part of that and overconfidence. But it turned out, I mean, those were very good investments for them early on because they invested directly into our parent company. I think that just extends out. And as we've grown over the years and added a lot of investors, some who we don't know, it becomes a little bit less personal. But like across the board, like our investor relations team, like anyone, we care so much about transparency. I feel like if I feel okay about an investment that doesn't go well, if we've been incredibly transparent and did all the due diligence we should have done, all of that. If a deal doesn't go really well, we learn from it and try to grow from there. And we work with accredited investors. We're taking a small amount of their capital. So as it has kind of become less personal, we have, I think, we have great team and all these things in place to just make sure that even if I'm not as hands-on as I was back then, we have all these checks and balances in place to make sure that we are treating them really well. I know we've generated very high returns overall, but we also do syndications. That's kind of our bread and butter. Someone could end up in one deal and it just doesn't go that well. We miss the pro forma. They don't get a great return, and that sucks. We have a culture where every investment that we look at, we are looking very long term. It's about how can we generate a great return for investors. So even though we will miss sometimes, those misses are usually not that bad. We can usually recover. And most of our investors are in multiple deals. So if anyone's in more than one or two deals, they almost for sure have a good return overall with us.
I think there's a strategy there of how you deal with the pressure, right? Jesse, you want to add anything to that?
For me, the pressure produces the focus on what is in our control and how can we just keep getting better and better and better. So like one example of that is like a break the deal process where every new investment, we bring a large group into a room and we try to really rip it to shreds and find out, what are all the potential problems, try to de-risk it, try to do a sensitivity analysis on it. And so that's an example of that is 100% in our control. And if we keep adding good systems and good oversight, to me, it's increasing the likelihood that the investments are going to go well, that we're not going to miss anything. For example, last year, our acquisitions team underwrote a little over 300 properties and we bought 2. So it's things like that where I'm like, looking at the marketplace, I look at the other deals that people do. Most of the other deals I see other people acquiring, I question. I think it's too high a price. For me, it's just that obsessive focus on what is within our control and how can we keep getting better and better. Joel will tell you this. I'm a bit of an idealist. I always think that where we're at today is not that great relative to where I think we can get to, but it definitely pushes us in a healthy way to keep trying to get better.
That mindset, that idealistic mindset, could potentially be just big dreams and be in the clouds. I've seen that happen many times with investors or entrepreneurs, and they've got this perfect scenario, and that's what they're headed towards. But what it doesn't do for that person is it doesn't focus them down to what you just said of, these are the things that I control, my exact plan, and I'm going to stick to it, and we're going to get better. We're going to have discipline, a lot probably like the sports you guys were a part of for many years. What do you think the difference is when you said you felt the pressure, it focused you down to the discipline, where maybe this other idealistic entrepreneur is just like, we're going to make it, but the pressure doesn't actually focus them down to the things that matter and move the needle?
I'll answer that quickly just because I am such an idealist. For me, it is partners and good people. Like if I had just gone off entrepreneurially on my own, I think I would be that total idealist. So I have been humbled so many times over the years of just realizing how critical it is for me to have amazing partners. Joel is an amazing partner. And then just in the areas of the business that I'm focused on, having a team around me that complements my skill sets, because I'm a big starter, not much of a finisher. And so I try to surround myself with finishers. So that's my take. Is it's nothing special about me. It's just having good partners.
Yeah, I completely agree. I think the balance of partnership, I think that's one of those things where entrepreneurs starting out, it's, I think that usually you're very confident, you think you can figure it out, and it's very easy to just kind of go on your own. And uh, I just advise anyone, try to find a part. It's so hard to find people who are like-minded. Your strengths complement each other, so it's hard. And a lot of times, you don't just team up with your brother. Like, I'm incredibly lucky. Like, we are very similar. I mean that. I mean, I'm incredibly lucky. The three of us, and as we got more successful, we had disagreements with my older brother in different ways of looking at things, and so that happens. But the three of us, all had very similar goals. Like, what do we want to be in 10 years, in 20 years? What do we want a company to look like? And so we had very similar ideas, very similar drive, very similar ambition, but very complementary and sometimes clashing strengths, which I think was an incredible blessing. So I don't take that for granted. I mean, I got so lucky, just to have two partners who were willing to make no money, work 80 hours, make no money, do everything it takes to win. And we were like rowing the same way. Like, we wanted the same thing. Partnership is incredible and so important, and also can be very dangerous if it's not the right people.
Yeah. Let's talk about some of those disciplines that you guys are focused on. Oftentimes in real estate, it's, a buy box, or like things that you said you looked at 300 deals, only bought 2. What are some of those X's and O's every single day that you or your team are just like, no, this is what we do, this is how we do it, and we're going to get these things right every single time?
So our kind of wheelhouse on the real estate side is 100 units and above. So for a long time, it was just Kansas City, but now it's about a 4 or 5 hour drive. Kind of, if you can do a day trip there and back, that's about our radius. And historically, I would say it was really kind of the value add. It might be a B, C product, ideally in a step up area, a C asset in a B area. But something where there's upside potential, there's some untapped potential in the property. There was a period there where the market got so ridiculous, in my opinion, that cap rates actually went lower on these value add older properties, because there was a craze. I think a lot of people, we were fortunate to be one, from 2009 to 15, 16, and there did a lot of these value add, projects, and did really well. And so kind of became a buzzword. And so since then, we've done some newer projects. We've partnered with merchant builders and built some new product, and then built a property ourselves with an in-house construction team. But I would say, by and large, and like, for example, the 2 properties that we bought last year were traditional value add deals. And there was a mentor of mine many, many years back, 30,000 plus units. And he said, when the market is down, he's like, I buy existing, I buy older properties, I do value add. And when the market gets really hot, I just get pushed in to kind of the newer product. And not that we're trying to emulate that, but we definitely have experienced that a little bit. Where the market was hot, we did more of the newer product, just because if the cap rates are similar, I'd rather have a newer product that's a lot easier to manage. But 100 units and above, and about a 5 hour drive time radius of Kansas City is really our niche. And we do in-house property management, and always have. And so that is a lot of groups. I talk with a lot of investors kind of around the country, and the feedback we get is there's a lot of groups of our kind of size and capabilities, in terms of kind of the size of properties we can buy, the amount of capital we can put together, that type of thing. But most of them will be either, regional, so they'll have a much wider geographical footprint, or they'll be in multiple real estate food groups. So they might do, multifamily, but then they also do, retail or office, or, some other component, self-storage or something like that. And so we've always kind of had that hedgehog concept approach, good to great. of just wanting to be narrowly focused and really have like a narrow niche. And so multifamily in a relatively small geographical radius that's our main niche.
Yeah. Something I've actually been impressed just as I've gotten to know you guys and before we even met Jesse originally, as I was just kind of reading up on you guys, it was like that hedgehog approach of just like, no, this is the game. And we're not going to get distracted. And as entrepreneurs, we can always get distracted. And, I love I've said for many years, I love the creativity of real estate. I'm not doing it for my full thing like you guys. I like to play and invest, and that's my creativity space. But this is the thing that you're doing and building, just like I'm building Gathering the Kings. And so I have to be narrowly focused on this is what we're doing. This is who we're attracting. And same thing for you. I'm just so impressed with that. Okay, so it came from a book, came from a mentor. Joel, would you add anything to just like your superpower? Because I think it's what you guys have, honestly, is a little bit of a superpower where you're just really laser focused.
Yeah, I appreciate that. Yeah, one of our core values is mastery and focus, and to be the best in the world at something. So we try to, in everything that we do, and we're entrepreneurial. So, as you point out, there's that entrepreneurial energy to like, oh, try other things. And like, so I think we very purposefully made that a core value because we understood that we're only going to be great at anything if we go really deep on it. So we had to we spent a lot of time saying, what do we want to be great at? What do we want to be the best in the world at? And so as our company has evolved, we have we'll add business units that are complementary to what we already do, private lending, we grow our acquisition. So whatever that person is doing for us, they need to be what we think is the best in the world at that thing. So that means the best in the world at acquiring at like our acquisition team. They would be the best in the world at identifying and purchasing cash flowing multifamily real estate in the Kansas City area. So that's a tangible thing that we can be the best in the world at, by, as Jesse pointed out, by looking at 300 properties. I mean, all they do is look at properties, offer, and we're going to look at 300 and get 3 in a given year. Especially, and I think going back to we started with investors. It's not okay to take other people's money. I mean, we had the mindset like we can't take other people's money and be like okay at this. Like anyone who has money has thousands of options of where to invest it. And so just feeling that the weight of the fiduciary responsibility, I think that pushed us into like, hey, if we want to like be able to, feel okay about ourselves and, show our faces in public, we need to be great at whatever we do.
Yeah. I mean, I think it just, both of you guys playing sports, it just all these, like, I mean, this is the play, these are the practices, these are the drills, like these are all the things that we just do repeatedly over and over and over. It doesn't matter that I can already do it. I keep doing it. I was listening to a clip the other day of Steph Curry. Obviously he had just an incredible game with the gold medal game. And they said that he's the greatest shooter ever with 3,200 something shots or something like that. But that he's for 15 years, at least, that's just his 15-year NBA career. Every single day he shot 500 shots in practice. Like that's what he does.
Yeah.
And they did the math on it. It was like, millions of shots to make 3,000 in the game. And that 3,000 has literally made him the best shooter of all time. And it's not about the millions, but you can't have the 3,000 without the millions that you guys are mastering, multifamily. But it takes like deep work, like focus, which is the ability to just like really hone in, but it takes like a long period of time and like just this extreme effort or intensity or obsession with, doing it and then doing it at the highest levels.
So mastering focus is a core value, but like one of my weaknesses has been like being too obsessed. Like you're saying, having the balance. It's like, that's probably been the hardest thing for me, at least. We have these other things that we know are really important, family and, all these other things that are, more important, in the whole scheme of things. And how do you balance that? Like that's the thing I still haven't figured out. I'm 41 now. So let me know when you have got that handled.
Yeah, well, I'm gonna turn it back on you. I'll give you a little runway though. What I have learned is that just because my marriage or my children are more important to me than my business, it doesn't necessarily mean I spend more time with them.
Right.
And so importance or value doesn't necessarily, or priority doesn't necessarily equal time.
Exactly.
And I think that comes down to maybe some communication with those who are involved with whatever equation that we're trying to create. But how does that look in your family? Whether it be with your wife or you're with your kids, maybe other extended family, like what does that look like as far as the obsession on that?
Yeah, I just have to time block, like being very intentional. And so that, I would be a mess without time blocking. Like I'm going to, and it's
Yeah.
strategic. It's like, I know that if I don't spend time with my kids, I'm not going to, they're not going to be as happy and I'm not going to be as happy. And so I just need to do it. But once I'm in like, in the swing of a work day and all this stuff it's easy to neglect that. But if I've time blocked it off and said, it's like, I'm not going to neglect it. I know that'll feel
Yeah.
terrible.
Yeah, but Joel, I became an entrepreneur because I didn't want anybody to tell me what to do. And now you're telling me that I gotta stick to a schedule. What? I don't understand.
Yeah. Yeah, it's like the blessing and curse of that freedom is ironically, we have to actually be more disciplined because I am not accountable to anyone really. I mean, I'm accountable, obviously, to my partners, investors, but I can do whatever I want with my time. And that can be a curse. So I have to be extra disciplined because I don't have someone who's telling me I can't, spend 15 hours working in a day or whatever. Like I have to be strategic about that.
Yeah. Yeah. Jess, you want to add anything there to just the obsession about you, your family, your kiddos?
Yeah, I mean, I feel like I'm as bad at this as it gets. And for me, it's future oriented versus being present. Like my biggest struggle, even if I've time blocked and I'm on, kind of spending family time, I will sit at one of my kids' soccer games and envision their whole life and estate planning and how am I gonna, transfer ideas and wisdom to them. And all of a sudden I'm like, what just happened in the last, I mean, I'm struggling to even watch the game. That is by far, and I don't have it figured out at all. It's something I was mentioning. I was in a kind of an all day mastermind group on Wednesday, and we talked about that a ton. And I'm just trying to learn and listen to others because, yeah, that is like my biggest. And I'm trying not to beat myself up over it because I feel like being future oriented and planning and strategizing is a strength. So I don't want to beat myself up that that's kind of the place I go to. And that is my happy place. Like I like to sit quietly and think about the future. But I'm still trying to figure out just how to be present. And like our family's been playing a lot more board games. It's competitive. So it's in the present and it's active. And we literally have, I think, probably like 50, 60 board games. And that's kind of that's one way where I can find that I'm super present because I'm trying to beat my kids at something.
Yeah.
What about for you, Chaz? Like,
good question. I think you're right with time blocking. If you looked at my schedule and my wife's, it's just like every minute of the day has an assigned purpose, and so that's by far number one. And you're right, that discipline actually is what equals freedom. It's the entrepreneurs and the investors who are listening to this going, well, I have all the freedom that I want, but their week wasn't planned out, and they're just shooting fires all day long, and they think that they have freedom, but they really don't. They're being tugged and pulled in all the different directions, and which then, to me, it pulled me away from the things that I said that I wanted, which was time with my wife, time with my kids. And so when I sit down on Sundays and I plan that out, literally every single minute of the week, I know exactly how the week is going to go. Now, there's obviously wiggle, and I'm not like a robot, but I'm telling myself how this week is going to go. And then I'm going to freaking stick to it because I'm a winner and I'm going to do what I said I'm going to do. And my family can count on that.
Yeah, I love that.
I want to end the show here with just talking about the future, since we've been kind of talking about living in the future. But, from a real estate perspective, maybe business, but economically, you're thinking ahead. There's some interesting things happening right now, politically, economically. What are you guys thinking, doing, looking at in the next 6, 12, 36 months?
Our main business, real estate, interest rates have had a huge impact on things. And we've been very fortunate in that we've locked in low interest rates. We have one deal. We have like 25 active deals or portfolios right now. And we have one that has interest rate exposure. So we're incredibly fortunate. We locked in interest rates and or purchased, with long-term non-recourse agency financing. Most of it's non-recourse agency financing that's like with either 10 or 12-year terms. And so that we're very fortunate with. But we have one deal that has some exposure, and so we're dealing with that. And then I think the interest rate environment, the reason I talk about interest rates right now is I think that's going to have just a huge impact on what happens with real estate. If rates don't, and rates have dropped considerably over the last 30 days. So, and we're now expecting rate cuts, which I think will happen to some degree. It'll be interesting to see how that plays out. But if that doesn't happen fairly aggressively, there's a lot of commercial real estate owners who are very exposed. And so I hate for anyone to suffer or feel pain or anything, but we also see this as an opportunity. And we've purchased, a handful of deals over the last couple of years, way less than I would have hoped, knowing the rates went up and knowing that a lot of people are exposed, and those people who, when the tide comes in, there's plenty of people who, their shorts are down. And I would have expected more good deals, but because like us, we're rarely going to sell anything because we're locked in. So there's a lot of owners who are just not selling right now. And so there's been slow, very little inventory. And the deals that we are buying are, someone has to sell because of interest rate exposure, but there's still a lot of other buyers out there. So we're not getting as good of deals as we would hope. But to answer your question, we would love to buy a lot of real estate over the next year or two. I think when we're trying to buy with bank financing now, which we can refi into long term. So we're now buying with a little bit shorter term financing, like we're fixed for 10 years, and we have interest rate exposure for 5, not to go too in the weeds, but so we're being very strategic about how we buy real estate right now, to take advantage if rates do continue to go down. And then on the other side, we're very involved in Hawaiian Bros. We haven't talked about that on this, but we co-founded it, and I'm on the board, and we've raised a lot of capital for them, and we're still doing that. So and then once we get to a certain point with Hawaiian Bros, we'll start a venture capital fund. So I don't know if Jesse mentioned that to you, but that's something that we're very excited about. We love investing in people, in new companies, new ideas. So that's kind of the next thing. So we're not shutting down anything we're doing. We're pivoting from what we're doing. We're still our growth is going to be just buy more real estate and then start this venture capital fund where we're investing in all these deals. And that's super exciting. I love analyzing new companies, new ideas, and that balance of like the math and then just the like belief in a person, in the psychology kind of behind it. Balance is super invigorating to me.
Yeah, you get to have your own Shark Tank.
Yeah, exactly.
Yeah. The only thing I'd add is just I feel like we're kind of on the precipice and trying to figure this out. So this is a challenge that I'm invigorated by, is just the challenge of scale. And I think we're butting up against where we're going to have to scale, through finding, really great people, or just, growing the team with really great people, which we have a phenomenal team already. But kind of the team makes fun of me because I talk about systems and SOPs like way too much. But just cracking that code of how to bring someone on board and educate them and make them a part of the culture and our values and kind of how we think, not just tactically, how to do X, Y, Z, but how do we think about buying deals? How do we think about management? How do we think about leadership? And so that is something that I would love for us to chat in a year or two and say, we have all these learnings that I can share with you and we can go deep on that. But that's something that I'm really excited about. And I don't know, we don't have the code cracked, but it's something that I think we're going to do a lot of work on in the next year or two.
And that's a wrap for today's episode. Joel and Jesse shared not only incredible tips on how to build and scale a real estate business in today's economy, but how to do it and operate in integrity while managing other people's money, for that matter. To learn more about their business and them, go to worcesterinvestments.com, and we put all the links in the show notes below for you. If you've enjoyed this episode, please make sure to subscribe and follow along so you can keep on winning in all areas. We'll see you soon. Thank you for listening to Driven to Win. I hope that you were able to pull out a few nuggets to go apply into your business right away. More importantly, though, I hope that you're realizing that it takes more to be successful than just being by yourself, doing it all on your own, carrying the weight all by yourself. What I have realized, not only in my own journey from multiple businesses and multiple different industries, and now interviewing over 200 or 300 other very successful 7, 8, and 9-figure business owners, is that it's tough to do it alone. And so Gathering the Kings exists to bring together successful entrepreneurs. In fact, we are putting together 1,000 kings, specifically who are grateful but not done. We're intentionally assembling kings who fight tooth and nail for their business, family, and communities. And here's what we believe, that in the pursuit of excellence in those areas, that it ignites within us the responsibility to govern power and forge a lasting legacy. So if that relates and resonates with you, and you know that you need people around you, sharp, qualified, other very successful business owners, I want you to go to gatheringthekings.com. I want you to take a look at what we're doing and see if it makes sense for you to be part of our pursuit to 1,000 kings. Talk soon.